Hello dear traders, my name is Elizaveta Belugina and very welcome to our weekly webinar which includes weekly Forex market analysis. We discuss Forex measures, we discuss some metals, maybe commodities, and we try to design some trade ideas for this week. So let's begin with the presentation as usual. I'll remind you that my name is Elizaveta Belugina and I'm the head of analytical department at FBS. So we'll start our talk today with the US dollar, with its prospects, as the US dollar is the main currency which takes part in most of the Forex measures and thus is extremely important for Forex traders. I strongly advise you to have a look at the US dollar index chart, as the US dollar index allows us to analyze American currency not versus one single peer of the US dollar, but against several currencies, as the US dollar index shows us the dynamics of the American currency versus the currencies of the main trading partners of the United States. So this is a kind of trade-weighted index of the American currency. And having a look at the weekly chart, we can see that the previous week closed in the bearish territory. We can see that there was a bearish candle on the weekly chart. The pattern can't be called bearish engulfing, as the last week's candle didn't close below the opening price of the previous candle, but still we can see that the pair's advance to the upside was stopped. This advance was stopped by a resistance line which goes back to this year's maximums, and of course this line wasn't easy for the bulls to overcome from their first attempt to do so. All in all, we can see that the pair is consolidating within a kind of wedge, and after this decline of the US currency next to the resistance line, of course it seems reasonable to expect some follow in the pair's pullback to the downside. Let's have a look at the daily chart of the US dollar index. Here we can see that the index opened with a gap to the downside on Friday, but then the index tried to close this gap. We can't say that it managed to do that fully. And on Monday, April 17th, today, trading was in the bearish territory as well. We also saw a small gap. So the picture doesn't show us that very strong momentum for the US currency. It shows that something like consolidation with downside bias is possible. We can see that on the upside, above the current price, there are some moving averages on the daily chart. These are the 50-day moving average and 100-day moving average, and they act as resistance levels on the upside. So resistance is located in the area of 100.50 and 101, and we will be closely eyeing this resistance line as resistance. Targets on the downside include levels like the area of 100, the area of 99.10, 99, and probably 98.50. to say that the period of consolidation is over for the American currency, we will need to see a bullish break above the area of 101.35, and in this case, such a break will allow the US dollar index to get higher towards 102.10, 102.25. All in all, the US dollar index continued its broad consolidation. Past week was, I can say, a very eventful week for the American currency. Firstly, we have to mention the escalating tensions between the United States and North Korea. There is talk that North Korea is preparing for a nuclear test, and according to the US President Donald Trump, the Asian country is a problem that will be taken care of. In addition, the US has dropped its largest non-nuclear device on Islamic State in Afghanistan. And the development of these tensions will be an important factor for financial markets this week. An escalation in the geopolitical tensions is certainly not good for the US dollar. The second important thing is that Donald Trump has once again tried to talk the US dollar down. He mentioned that he favored low interest rates, and he also said that the US dollar was getting too strong. And on Friday, there were some disappointing US economic figures. Actually, we saw that the US inflation figures declined in March. Consumer price index fell by 0.3% on the monthly basis. The core CPI contracted by 0.1%, and there was a rather dismal reading of retail sales. The headline indicator of retail sales declined by 0.2%, and there was no change on the monthly basis in the core retail sales. This is surely a kind of cold water on those who expected the Federal Reserve to increase interest rates in June. And now we can say that June rate hike by the Federal Reserve has become less evident. The last data I saw that on Thursday, the chance of the June rate hike was estimated by the market as 57% possibility, and I think that this will likely decline. And I think that there will be doubts about the June rate hike until we get stronger inflation data from the US, and we may have to wait another month for that to happen. So there will be comments from the Federal Reserve. This week is not very packed. The statements of the Fed's official will get only, I think we'll get only FOMC member Kashkari speak on Friday. But if we look further ahead, if we look at the FOMC May meeting, of course, the recent data will give the market, will give investors more food for thoughts, and traders will be waiting to see whether the comments of the Fed's members will become less hawkish, or that they will stick to their hawkish outlook. So some analysts say that actually this Friday's piece of data is not that bad, that the high pace of hiring and the good state of the US labor market is the best which is in America right now, and this good labor market can encourage other sectors of the US economy to show better results. And after all, this will be enough for the Fed to raise interest rates in June. That may be possible, but we know that the market lives by expectations, and bad data releases certainly don't improve these expectations. This is why I don't think that we'll see a significant bullish impulse in the US dollar. We have a kind of combination with this increase in geopolitical tensions and some signs that the US economy is not doing as well as the analysts have thought. This combination will likely keep the US dollar under pressure in the coming days. All in all, it seems that the US economy is in a good shape, but the market is not really sure about that, and the recent news flow has distracted the market from these prospects of the US rate hikes. In the coming days, we'll pay attention to Empire State Manufacturing Index, housing and industrial production. These two will appear on Tuesday, Philadelphia Fed Manufacturing Index on Thursday, and existing home sales together with the speech of FOMC member Kashkari on Friday. In addition, US Treasury Secretary Mnuchin will speak on Thursday and may give more details about the border adjustment tax and the incoming fiscal policies of Donald Trump. So far, Donald Trump has failed to pull through his healthcare bill through the US Congress, and this surely decreased the market's faith that he will be eager and able to push through that tax reform. We now see that Donald Trump is doing a lot of things he said he won't do during his election campaign. In fact, his actions are pretty opposite to what he was promising everyone during his election campaign. And as a result of that, Trump bullishness for the US dollar, this Trump factor, is no longer such a strong driver of the US currency to the upside. If we look at the economic calendar, here I have calendar and the most important events for different currencies, not only the US dollar. We can see that today there was a release of Chinese GDP and industrial production figures, and these figures came a bit better than it was expected. However, we saw that Chinese stocks and the regional markets didn't have a good day during the Asian session, and this is explained by concerns about the situation with North Korea, as China is tied with this economy. It provides some economic help to North Korea, and the recent meeting between Trump and China's President Xi Jinping may have made China to somehow alter its position. So increase in tensions between these two economies, China and North Korea, is certainly making Chinese traders more fearful. And also there are some news about restrictions in Chinese financial regulations, and this also represents negative factor for the regional stocks. So despite some bright figures from China, the market is still more in the mode of risk aversion. On Tuesday, pay attention to the release of monetary policy minutes of the Reserve Bank of Australia. I can remind you that the last meeting of the RBA, at the last meeting, the central bank's policymakers removed any risk of higher interest rates this year. So likely the minutes will represent some headwinds for Australian dollar. There will be Euro area's final inflation on Wednesday. There will be New Zealand's inflation on Thursday, and a speech of Bank of England Governor Carney on Thursday as well. Britain will release retail sales figures on Friday, and there will be release of flash Euro area's manufacturing and services PMIs on Friday. This is actually the most recent data about the health of the European economy. So we'll watch this data from the Euro area. This is the most important release for the Euro area this week. Although we can say that this week is rather light in terms of economic data, there are no big meetings of central banks, and even the number of important events isn't that big. However, I didn't include it here in this economic calendar, but we have another date, not a weekday, but a part of the weekend, which will be very important. It will be the French presidential election taking place on Sunday, April 23rd. And the event is promising to be really, really interesting. Here I have put some recent data, the opinion polls, from one of the forecaster, and you can see how the picture changed from March 2017 to April 2017. So 1 month passed, but the positions of the main candidates have switched a bit. We have two front runners who are Emmanuel Macron, he is a centrist, and Marine Le Pen from the far-right National Front. They have both about the same support of the French population, around 22%. And just after them, there are Mélenchon with 20% and François Fillon with 1% less, 19%. So we can see that in comparison with what was in March, Mélenchon gained 5% in his popularity. This is a kind of unexpected. Mélenchon is a leftist candidate, and the same as Marine Le Pen, Mélenchon is for France leaving the Eurozone and the European Union. So you can see that if either Mélenchon or Le Pen gains much and joins the second round of election, then it will be negative for the euro. Figures like Fillon and Macron should be positive for the euro. As the winner, the French president can be elected in the first round if more than half of those who cast their vote for this person. This seems unlikely that someone of this list will gain more than 50% of the vote. So likely there will be a second round of the election taking place at the beginning of May. But still, despite the fact that we won't know who will become French president after this Sunday, we will still have these two front runners, and taking into account the fact that all candidates, the four candidates here, are really close to each other in opinion polls. Anything may happen. The market players are ready for some unpredictable results, and of course risks remain. So it is clear that the European currency, the euro, will be under negative pressure this week. And talking about negative surprises, talking about the market's risk aversion, I would like to show you this chart I found on Bloomberg. This is Credit Suisse Fear Barometer, and this indicator is now actually close to its record highs. This indicator shows us the demand on protection against declines in the U.S. stock market index S&P 500. So this desire of the market players to insure themselves against some negative developments against of the fall in the stock markets. This index is very high, and it means that the markets are in the risk averse mode, and that we may see more of this fear in the coming days. This is my general message. Let's now look at the currency charts and discuss the particular levels of Forex currencies. We look at the euro dollar, look at the weekly chart, and first thing we have to look at are the Japanese candles. We can see that last week the pair closed at the positive territory, although it didn't close at the week's high, which was located at 106.77. The close was 67 pips lower at 106.10. This tells us that despite the US dollar's weakness, which led the pair return above 106, and the escalation of geopolitical tensions, which supports the euro as the funding currency, concerns about the outcome of French election continued to limit the euro on the upside. Currently, euro dollar is trying to get higher, but we see several resistance levels ahead. Although looking at the weekly chart, it's also worth noticing that the pair played this support line, which goes back to the beginning of 2017. The pair did get below this support line, but then managed to somehow get higher, but not significantly higher, and we are still playing, the pair is still hovering at this support line. On the daily chart, we can see that the pair today rose to 50-day moving average, which is located at 106.50, and here the pair finds some resistance. If we are talking about the economic picture, economic fundamentals of the euro area, I can mention that German economic sentiment strengthened according to the data released in the past week, but the euro area's industrial production contracted, so no certain thing about the European economy can be said from this. Today, many European banks are closed. This is the Easter Monday, and the amount of liquidity is lower. We will be watching final inflation data for the euro area on Wednesday, but I think that it won't be the main factor which will be driving the currency pair, as the European Central Bank has made its position clear about the inflation that still low, and the European Central Bank is not concerned with higher consumer prices. So French elections will likely dominate this situation. And given the fact that the US dollar is not feeling strong as well, there is potential for the pair to trade between 106.70 on the upside, this is the first weekly resistance, and levels around 105.60 on the downside. The pair still has strong psychological support at 105, and in the vicinity of this level, and further resistance lies at 107.28 and 107.78. I think this is the ceiling for the price if there is some growth above 107 mark. We can see that currently the euro is trading above the weekly pivot level located at 106.19. It means that the outlook is bullish, but I like to repeat that the pair will likely fluctuate around this level in the absence of either bullish or bearish momentum, and in this kind of dualistic fundamental picture with weakness of the US dollar on the one hand and French elections on the other hand. Then, if French presidential election ends with victory of a pro-euro candidate, then in the longer term, I see higher levels for the euro, around 108 and probably higher. But for now, the risk isn't out of question, and this week the euro will feel the negative effects of this event. We are moving further to the British pound, which has managed to overcome resistance last week and regain higher levels. Let's talk about this. British currency surged to the levels at 1.2575 in the course of past week due to strong economic data out of the UK and lower US dollar. British manufacturers reported the fastest export growth in more than 2 years, and UK consumer prices increased in March. Average earnings have finally edged up. Sluggish wage growth was cited as the major reason the Bank of England refuses to raise its interest rate despite surging inflation figures. And the improvement of this indicator may make the Bank of England somehow rethink its position. The greenback was hit by Donald Trump's action and the fact that he talked down the national currency, the US dollar. We will pay attention to what the Bank of England Governor Carney delivers in his speech and to Britain's retail sales on Friday. Data from the US will surely be important. The outlook for the pair looks rather well. We can see that levels around 1.26, 1.2625 are quite attainable on the upside, but here the pair should find resistance. We have here the resistance line, which is going back to December 2016, and it connects this high with the high of February, and also here we have the 200-day moving average around 1.2625. So this will be a kind of a heavy resistance, and the pair will need a significant driver, something new, to overcome this resistance level. My bet is that we should limit our bullish targets on the British pound by this area, as it is too risky to count on the break higher at this point. Support levels are located at 1.2495 and at levels around 1.2420. Here we find 100-day moving average and 50-day moving average. These two moving averages are horizontal, as they have been. The 50-day moving average has been horizontal since the middle of December and 100-day moving average since the end of February. These lines don't seem to be going anywhere, and it means that the price will be encouraged, will be lured to return back to this central rate around 1.2420. So this is why I don't think that despite the potential for some increase, that this rise in British pound will be sustainable. We don't have much news about Brexit, and it is not the primary factor as the terms and the actual date of negotiations between the United Kingdom and the European Union has been pushed further into future, so it is not a near-term business. We can also see that the pound is kind of overbought. So, all these points that there is not much on the upside, some scope, but not much, and I've told you what are the limits for the British pound. Next, we come to dollar yen, and as we talked about the market's risk aversion, so it is clear that in a situation like that, the Japanese yen, which is often perceived as a refuge currency, Japanese yen regained power, and dollar yen went down. Here we have a weekly chart, and the pair has finally made advance inside this weekly Ishimoku cloud. We are now at the middle of the cloud. The pair broke below 200-week moving average at the level of 110.27, and it currently is trying to find refuge at the 50-week moving average located at 108.30. This line can provide some support for the pair, but if the geopolitical tensions keep intensifying, then we'll surely see dollar yen getting much lower. The next level, the next potential stop here is the Fibonacci retracement level of 61.8%, located at 106.50 area. And when we'll get to the bottom of this very small cloud, located near 103.75, and the next Fibonacci level near 103 itself. So this is the weekly chart. Let's see the daily chart. Here we have the negative intersection of the moving average. The 50-day moving average went below 100-day moving average, and the pair is also trying to erode 200-day moving average, which used to support the prices for some period of time. We had already the pair close below this 200-day moving average on Friday and below the 50% Fibonacci retracement. So I think that the pair is very vulnerable to get lower to the area of 106.50. Of course, the pair is a bit oversold right now. So we will be looking for an opportunity to enter a bearish position. But if you have one, maybe holding to it won't do much harm. On the 4-hour chart, we can see that the pair is a bit oversold. There are signs of some correction at the 4-hour chart, but will meet a resistance and the potential area to re-enter short positions is the psychologically important level of 110, their former support, which is now a resistance. You can see here the resistance line, the moving averages on the 4-hour chart, which are going to the downside, and also the previous line here. So we will be watching at 110 for the pair to recoil to the downside from this level, targeting 106.50 mark. Fundamentals for dollar yen are not very interesting. We have this factor of risk aversion. We have dollar suffer from the sayings of Donald Trump. We can see that Trump showed willingness to talk down the US dollar, and the aggravation of political conflicts offered a significant boost to the yen. We will be looking at the developments of the situation between the US and North Korea. On Thursday, we will be watching the speech of the US Treasury Secretary Mnuchin, and it might be important to clarify plans of Trump's administration. Towards the end of the week, the US dollar might recoup some of its earlier losses if investors think that it might be difficult for Trump to achieve a weaker US dollar. But with the recent deterioration of the US data, probably the negative factors will prevail over the positive factors for America. So the technical levels, I think I've made clear. Let's have a look maybe at some other assets. We can watch gold and its impressive breakthrough to the upside here. Can make a bullish trend here. We can see that gold managed to break resistance of 200-day moving average at 12.56, and that we are really close to an important level of $1,300 per ounce of gold. This level, this area will likely provide some resistance. The asset is also overbought, but we have the bullish trend being established here for the US dollar and for gold, and the weakness of the US dollar is certainly positive for these assets. So we will be looking to increase our bullish positions in gold on the setbacks, on the pullbacks to the downside. Australian dollar has managed to close last week above the middle of the previous candle's body. It managed to return above the 50-week moving average, and looking at the daily chart, you can see that the recent days were very positive for Australian currency. The Australian dollar was helped by the very good labor market data from Australia that beat the market expectations. China's trade balance data showed a significant surplus, which exceeded the consensus forecast. And data from Chinese economy released today also contributes to this positive outlook. However, we can see that there are some resistance levels ahead. We should mention resistance around 0.7610 and 0.7620. Still, I think the pair is capable of pushing higher this week. to levels above 0.76. The ultimate resistance will be at 0.77. We have talked about this resistance earlier. This is a really hard levels for the US dollar, the Australian dollar bulls, as they didn't manage to hold above this level for a sustainable period of time during the previous weeks. This is why I don't think that betting on Australian dollars at once above this level is suitable, but some levels higher on the way to this point we can certainly reach this week. New Zealand dollar is also trying to get higher. We can see that the pair equivalent from support managed to overcome resistance, and we will be looking towards the next resistance area at 0.7060 and 0.7080, next level for Australian for New Zealand dollar, I'm sorry. And Canadian currency, Canadian dollar remains more or less sideways. The trading in the areas close to 1.33. It's a bit dull to trade Canadian dollar, but if you are a range trader and if it is comfortable for you to trade in ranges, then we have reference points around 1.35 on the upside and 1.3073 on the downside. The range which is holding for US dollar Canadian dollar and may persist in the coming days. All in all, the outlook for oil, which is Canada's main export, has improved. More members of the Organization of Petroleum Exporting Countries are seen ready to extend their output cuts. US stockpiles are declining as the refineries are increasing their demand ahead of summer driving season. So the outlook seems favorable for oil and for Canadian dollar as well. So we will be looking towards the lower edge of this trading range, which is located at 1.31, 1.3070. These are our levels to watch. So I think that these are the main things I wanted to talk today. And now I propose to make some conclusions of what we were talking about today. So US dollar is consolidative, but we can see that American currency is facing a lot of difficulties, like the ability and the focus of the US president to talk the US dollar down, together with some geopolitical uncertainties. So we think that the US currency will likely remain under pressure in the coming days. At the same time, the euro probably won't have an opportunity to benefit from this weakness of the US dollar, as we are approaching the first round of French presidential elections on Sunday, and the risks are high ahead of this event. So we will look for a level at 10670 to limit the upside, and the pair to remain vulnerable to testing levels around 10560. For the British pound, there is a chance to get to 1.2625, but at this point the pound should face significant technical resistance, and in the absence of further drivers it may visit lower levels. We will have to wait and see what the Bank of England's Governor Mark Carney will say, and what will be with the UK retail sales data. Dollar yen looks very vulnerable for a decline to 106.50. Resistance in case of the pullback up to 110 mark. Australian dollar is rising for several days in a row, and it may reach levels around 0.7620, 0.7650. The ultimate resistance at 0.77 should cap the way to the upside, and some more can be achieved by the New Zealand dollar on the upside. We focus on levels at 0.7060 and 0.7077 here. Gold managed to overcome significant resistance and is approaching the key level of 1,300. The asset is a bit overbought, but we will be happy to join this bullish market at lower levels around 1260, 1250. I think that this is all for today. I thank you for your attention. I hope that the information was valuable to you, and I'll be very happy to join you with my report about the weekly outlook of the Forex pairs next Monday. Thank you for your attention, and I wish you all the best